Hey traders, this is Jeff from zentrader.ca with a weekend update. This is the timing chart that I use to illustrate when my signal gets a signal. And the last short signal was right here, and it was an intraday alert, and it's been pretty bang on. And I only say this because the last two times I shorted were essentially head fakes. This one basically reversed very fast. This one, it worked a little bit and then it reversed. And this is one of the reasons it's important to sometimes be quick and take profits. But and I remember doing these updates. That I had spoke at one of these times the signal is going to work, and you just kind of have to work through these head fakes and wrong signals, because eventually you're going to get on to a good one. And I think that's what we're finding ourselves in now. And even though we're essentially oversold, and I'm going to illustrate that with this put call chart here in a moment. But I want to go to this Dow Jones Daily, and you can see that we've had a number of distribution days. I believe I counted 10 since the beginning part of May, with one accumulation day, and then you got the McClellan oscillator down here at a really low reading. And I think that when you look at this put call ratio, you can see here we're entering an area of really high put buying, and I want to show you, and you're gonna have to make this video big to really see what this didn't work the way I wanted it to. That's very bizarre. Let me try something here. I'm just gonna have to make a new video because I want to be able to use this Flash tools. Okay, we're good. Sorry about that, but sometimes stock charts messes up if you leave a chart open too long. So what I want to do is just show you how I think we've got a good 80% chance that we're going to bounce. So I'm going to be looking at the times that this put call moves above this around 8.5 level. You can see here, this is the NASDAQ chart. It bounces here. Here it bounces just a little bit. Here it was bottoming and made a pretty significant bottom. There you can see right here it goes back above. That was a low. There are really only a few instances. This is one of them. This is where it bounces like one day and then it falls off a cliff, and then here it bounces like one day and then falls off a cliff. This bottom turns out to be a pretty significant, not significant, I guess. And when I say a bounce right now, I'm not saying a bounce that you buy. I'm saying this is a bounce that you wait and then you get heavy on the short side again, because we're going to see more lows. This was a little bit of a bounce, probably a 6-day bounce. Ideally, that's what I'm looking for. Like here, we moved above. This turned out to be a couple weeks bounce. That was more like 2 days. This one was probably a week and a half, maybe. And so, given that we've gone, like I said, straight down on the markets, you can see here on the Dow Jones here, we've got, I don't know, I'm not going to count them, probably 12 out of the last 13 sessions have been down. And that's, maybe we get a gap down on Monday. Maybe we just continue to sell off on Monday, and then we get a bounce Tuesday or Wednesday. And then I think it would be great if the markets could put together 4 to 8 day, low volume rally, maybe back here to the 12.8, 12.9. I don't really like to put targets, but when you look at this SPX chart, you can see here we are coming to an area which have multiple points of confluence. You've got this support line. You've got the 200-day moving average here. So you've got some areas which suggest we're really oversold on the RSI. We're down to 23. 20 is generally an area where we bounce. So again, this bounce is not one, you don't buy this dip. You wait to short it, in my opinion.